what do we have? Higher highs, right? Higher highs, higher lows, right? And another factor that's not really talked much about, and this is something I really do emphasize in my seminars. The market not only closes above its open, but notice here the market closes, see that hash mark there, above a prior time period's high. That means the market's broken out and it's closed and it is expanding into new price territory. And when a market expands into a new price territory, guess what, folks? It wants to continue to test that expansion until one of two things happen. Either demand dries up or supply increases, which is similar as the same thing. More supply, less demand. Demand may stay steady, but if there's more supply, price is going to go down. So in a bullish environment, buying begets buying, as we say. More importantly, we see higher highs, higher lows, as you see here. That's a bullish trend, and that's very good. More importantly, we see higher closes than the prior time period high, and we see the market close above the prior close. Those are bullish trend signs. Now, what would we want to do? In that case, if we're bullish, if you think about it, if the expansion numbers to the downside, looking at our S1, our S2, and our S3, if we're in a bullish mode, the market's probably not even going to go down there. We're going to anticipate to see a higher high and a higher low, right? So we were going to probably focus on the pivot point. Imagine this. If this bar right here, if that's the high and that's the close and that's the low, if you added up those three values, the pivot point's probably somewhere above, of course, above the midpoint of that range, right? Because you have two values above the one value, which is the low. You have the close and the high. They're close to each other. So naturally, those two values, if you average them up, they're going to be up here. So if you average by 3, your pivot point's going to be closer to the midpoint, or above the midpoint, more importantly. So we're going to want to focus on the S1 to the pivot point and possibly as high as R2 in a bullish market environment. Well, let's try to focus this and narrow this down so that it's completely understood in a graphic fashion. If we took the high, the low, and the close, threw it in the computer, got our calculations, this is about exactly what it would look like as a lineup with pivot expansion, both for resistance and support. First off, the R2 number would be way up here. The R1 would be at or above the prior high. The pivot point would be slightly at or above the midpoint of that range. S1 would be above the low. S2 would be, of course, an expansion of the overall range and an expansion of the low to the downside. So S2 would be lower than the prior time period's low. So that's how pivot point analysis and the mathematical calculations works out. If we're bullish, why would we be looking at S2? So in a bullish market, we should be looking at what? Higher highs. The highs should be higher, and the lows hopefully should be higher than the preceding time period. In that environment, I use the S1 up to the pivot point for targeting what might be the low of the given session, and then I'm looking for R2 for targeting that time period's potential trading range. Why is that important to me? Because then I can, if I look at a buy signal and I get a trigger to go long sometime during the course of the day, I know that the market's only going to go so far in that given time period, and it'll help me to target a profit potential at resistance for that given time frame. So here's how I help filter out the numbers. If I'm bullish, I'm using the pivot to the S1. It might be the midpoint, it might not be the midpoint, but I know somewhere in this target zone, I'm looking for a trigger to go long. Now, I just don't go buying at pivot. I need something more, and that's where candles help me. And I have something a little bit better, which is real exciting, and that's using a pivot point moving average methodology. So for foreign currency, since it is such a trending market, the market really behaves and responds well with moving averages. So I think it's something that we need to help as a trader to put a little bit more on our side as far as a clue as to what to use, or giving us a clue as to market price strength, weakness, and that will help us to determine price direction and how long we should stay in a trade or not. All right. So how do we come down and